What's going on, guys? This is Brinks Trades coming to you live with a weekly breakdown video. It's a little bit different than what I usually do. Usually, I'm on here with on Saturdays, and we have the breakdowns, the breakdown videos that happen with, in coordination with the Trading Up podcast. But obviously, this is Monday, but I wanted to come on here really quickly and go live for you guys and basically just break down what I was going to do since I missed this past weekend's markets. So give me 1 second. So what I wanted to do is come on here really quick for you guys and just kind of go live. I know this is not going to be anywhere near as long as the other pod is, the other weekly stream is. So I want to drop this in my Discord really quickly. And then if you guys are tuning in, I don't imagine it's going to be as many people as on live, but I'm going to drop this in the chat right now. So basically, again, obviously everybody here is on my page. So, or it's a subscriber or in the Discord, so I don't have to intro myself. So I'm gonna save you guys from that. But really just want to take a look at the charts. First and foremost, want to show the funded account status with what's going on with this. So basically, as you guys can see here, this is the FTMO page. I can't fake this, right? FTMO. So I actually was able to pass both challenges, right? And I requested FTMO put the 200Ks together. So I have one 200K account that I will be starting this week. I also will be buying another 200K accounts, or maybe I'll just buy one 200K account. I'm not sure just yet. This week as well, and trade these all together. I'm getting I had an email request sent out to FTMO to see if I could get a copy trader, if I'm allowed to copy trade, like with an official social trader. A lot of the prop firms have gotten weird about copy trading, and especially copy trading with a bunch of different firms all together. So I'm just getting clarification on whether I can do, trade these all together at once. This account and the one or two other accounts that I'll be able to take and trade with them. But the goal is to get maxed out, obviously, and so I'm halfway there with FTMO, and then from there on, it's just trading the 400K account and then just requesting the scale up plan, which you can scale this 4 million up to 2 million over like a year or two, right? So they really reward traders who stick with them for long term with more and more capital, right? And there's certain rules you got to meet to scale up. So that's going to be really cool to get that and then start scaling that out. But 2 million in funding with FTMO Max, and then obviously scale up some other firms as well. So that's really cool. I'll start that up, but you guys obviously hold me accountable. These are the numbers. I won't show you my password because I don't need y'all in my account. But basically pass the verifications for both, and that's where we're sitting at right now. So really excited about that. Really excited to be back funded with, again, the best prop firm in the world, at least on the FX side. All right, Top Step is a really good one still too. So let's go ahead and look at dollar analysis really quickly. So obviously we're in the middle of the week. So this is going to be a little bit different than our Saturday call. So what am I looking at here? So if we break this down with the our situation here, you guys can see that we are looking at dollar analysis, and this is basically playing out the way that we thought it was going to play out over the past few weeks. And so basically we said we were going to hit this area of interest and then start to reject from here. So ideally what I want to see this do is fall back in line with the overall weekly time frame, right? So the overall weekly is still very kind of bearish, right? We have had some rejections from this zone. This could be a potential break in market structure going higher, right? But as of right now, I just kind of consider this all chop, right? Because there's not really anything clear here. And just with the idea that, obviously the government's in a shutdown, it's just not really doing good right now. So Ideally, I want to see the market continue to go lower. Oops. And so what I was looking at here and how we react to these fair value gaps is going to let us know basically like what we should be expected from here. So when we look at these two fair value gaps, they're sitting on dollar, right? So this one right here and the secondary one right here. Ideally, I want the market to reject from this level, right? I don't know if it's this one or if it's the next one, but I want the market to reject from these two levels. If we start trading back above this high, then obviously any idea that I have for bearishness is shot. So I'll be looking at this level as kind of my fail-safe level, right? But ideally, somewhere between where we're sitting at right now and obviously up here, I want this market to return around. So there's three levels. This fair value gap here, obviously the secondary one up here, and then maybe consequent encroachment, right? But ideally, we'll stay in this zone and we'll reject from here and go lower to continue on with this bearish move. So ideally, what that gives us is a bearish dollar. So that means we should be looking at a bullish euro. Euro is really interesting right now. It's not 100% clear because we kind of are in a downtrend still. And euro and dollar kind of look almost a little similar. But you can see here we did consolidate up here. We are overall in a downtrend on dollar too. So I don't want to be too risky on this because we are making lows here and lower highs, right? So ideally, what I want to see on euro is the market to trade into this overall fair value gap right here, and then take things higher. Right, so that's the idea for euro is that we trade into this overall fair value gap and then continue to run higher. I kind of want to see again what happens if we fail to respect this overall fair value gap, just kind of like how we kind of on the other one as well on dollar. If we fail to respect those civvies that we see here, it's basically the opposite of what we're looking at right now. So if we fail to respect those fair value gaps, just like we fail to respect this one, then we could be back here to a bearish move. Ideally, this is kind of my fail-safe level again, right? For anything bullish. And that's going to be that 1.15412 level. So again, if we don't respect that and we obviously break structure here, go back down, I got to stick to the bearish idea again. So I will be watching that, but ideally I want to see the market respect this level. We are trading into this gap. There's an order block here, right? There's a fair value gap. So there's a lot of stuff in this area that might get me to want to stay. So ideally, that's what I'm looking at for euro. GBP is going to be very similar. I like stuff. I like to see, like, when I look at correlating assets like euro and GBP, I love to see like when one is already dipped into the fair value gap and the second one is like hesitating to go into that fair value gap. So I'll show you here. Like there's that secondary fair value gap right there. You can see the market is really failing to trade into that. It's kind of consolidating. So the reason for that is because a lot of times what you'll see is this consolidation is just like that opening range, opening week consolidation where we consolidate, manipulate, and then spend the rest of the week going higher. And so a lot of times what happens here is price will dip into the fair value gap, right? And then it'll dip one more time and kind of knock out anybody that gets it right sitting below this low, right? So like you'll have price right there. So you have some liquidity building up, right? Sell side, right? Because all these buyers are buying in, because they think this is going to be the low of the day, low of the week, right? And then you'll see this come in one more time and knock them out and then still respect this gap and then go higher. You see that so often. So I love to see when the other asset hasn't dipped in because it'll probably dip in then. And then euro obviously will dip in and then take out the lows there and go higher, right? That's kind of like what I think is going to happen. But obviously, again, educational advice, not investment advice. But you see that play out a lot of times that, like, whenever price trades in that fair value gap, it's like trying to stop out the traders that get it right. So you saw it going there, you saw it wick away, and you're like, okay, cool, I'm going to buy. Boom. And then price comes in one more time and knocks you out, not because you put your stop loss right below the candle you get in. That's kind of what you're taught. and comes down one more time, stops you out, and turns around and goes higher. That's why I always put my stop losses, obviously, under the candle that forms the imbalance. We talk about that all the time. But this is GBP, right? So ideally, this is what I want to see. We did invert this CIVI right here. So if you look here, this is inverted, right? It's a very, very small fair value gap. It's not big at all, but that was inverted. We did technically wick down here, break structure, run higher. So ideally, I want us to keep running up. And what I'm looking at for targets are this high here, and then this high here, right? But we got to break structure. We got to respect that gap that we're currently looking at. And so this is the 1.348 and the 1.35276 level. So that's ideally what I'm looking at to go higher. Let me go to the comment section real quick. Oh, shit. Okay. Damn it. Dude, I'm gonna have to give you my cell phone number, man, anytime I do this, because I always do this, man. Okay. So that was annoying. Okay. All right. So you can see my chart now. But anyway, I'm gonna run through this really quickly again. So dollar analysis, same thing, right? So basically, I kind of see this as huge consolidation, right? We wicked up here, we wicked down here. We're just kind of chopping around, right? If I look at dollar, breaking it down to the daily time frame. Again, I said we wanted to, if I go back to this one instead, you can see it's a little bit better. I saw the market reject from this high, right? And I think that it could be a continuation of the overall higher time frame trend, which is still very much bearish, right? We're still very bearish. Nothing's really changed. If anything, stuff has gotten worse with inflation, gold, all that stuff like that, right? So hasn't really been a change. So again, I do want to see the market continue to run down. I'm looking at, if I get rid of this, I'm looking at sell side here, right? But I would like to see the market trade back up into this. And I'm kind of treating this as a run of liquidity. We traded up into this liquidity. We broke market structure and we're running down, right? That's kind of how I'm seeing this. Obviously, with our setup, we got those two fair value gaps that are sitting right here and right here. So I'd like to see the market trade up into, we're already in this first one, but this second one, the third one, and then run lower. Hold on, give me 1 second. Sorry, one second. All over the place today. Okay, so this is really like the definition of a live stream because I'm all over the place. All right, so again, I want to see the bearish dollar, right? So that's kind of what I'm looking at, and I want to see here is the market trade up into this and then go lower, right? My fail-safe level will be this high. Obviously, if we start trading back up above this high and close, then any bearish idea I have is invalidated. Not only because we take out the high and we're back in a bullish market structure, but we also will have fully inverted that fair value gap. So I want to see this keep running lower, and I want to see what the market gives us. So Euro is the opposite, right? So make sure I'm sharing. Euro is the opposite. So again, I want to see the market trade back into this fair value gap, into this. We have a lot of stuff here. We have this order block sitting right there. We also have, this is our fail-safe level. If we start trading back below here, then any idea I have for bullishness is kind of gone. Again, this is a little bit more tricky because we are still kind of technically, it is a break in market structure. We run down here and run higher. But overall, it kind of looks bearish still, even though we did break structure here. So I'm being very careful here. So ideally, I want to see this hold. So would love to see our New York continuation setup happen, sometime today or sometime overnight and going into London today. I'm sorry, today. I keep saying today. On Tuesday and Wednesday and Thursday, right? Maybe we dig in here and then go higher. And what I was saying earlier is I love the fact that Euro has already traded into this fair value gap. Whereas if you look at GBP, it hasn't yet. And so a lot of times what you'll see is on one asset, the market will have traded into this gap and then, basically stop out the people who get it right? Because a lot of people will see this trade into this gap or they'll see this as the low, right? And um, they'll jam their stop losses underneath this candle and wait for the move to go higher. And the next day or the next candle will usually come out, take out the sell side that sits below this low, which is their stop loss, and then run higher, right? So a lot of times I love to see setups where one asset has already traded into the gap and the second one hasn't yet, because there's a good chance that this market might run in there one more time, right? And you see that setup play out a lot. Like you'll see it play out a ton of times where the market will trade into that gap and then reject, and then it'll come up and then take out the high of the candle that just traded into that gap and then run. And that's just a stop punt, just trying to clear out the people who get it right. If it happens to you, it's going to happen to you. If it happens to you, it shouldn't happen to you, because your stop loss should always be underneath the candle that forms the imbalance. So if I was long and I was swing trading this, my stop should probably be down here. I'm not doing that though, because I'm not swing trading this. But if I was, then that would be what I was trying to do. So all right, so let's look at GBP again. Same thing here. I want to see the market trade up into this gap, and then I'm looking at targeting for these levels of buy side at 1.3485 and then 1.3528. So that's what I'm looking at for this week. Overall, I am looking at this fair value gap here. Like that's a very clean area that I think the market could potentially run to if we do get an extended breakout. Again, all depends on kind of our fail-safe level, which for this one is going to be, if we invert this fair value gap, it's going to be right here. This wick is kind of long, so I'm just going to say this. If we fully invert that fair value gap, I would imagine, and this order block there, I would imagine we're going to keep going lower. So I'm going to say it's my fail-safe level at 1.33 there. Gold, I'm going to talk about gold in a second, because gold, you almost have to treat gold like it's NASDAQ. So I'm going to look at NASDAQ first. NASDAQ is, I wanted to stay away from NASDAQ last week, and I mean, this is not looking really great to trade now either, because we're very close to the all-time high. So like, I'm going to stay away from NASDAQ. I'm going to come back next week to NASDAQ and ES, because I think these are all going to be very close to the high. Yeah, there's not a lot there. And then YM, same thing. So I'm going to take a look at gold, and then I'm going to call this. Actually, gold and odd. I'm going to look at this. So with gold is on a run right now. The only thing we can really do is try and catch when it pulls back, right? And so ideally what we need to be looking for when it comes to gold is just like clean continuation plays. And then if it takes out the high for the week or it takes out the high for the day, then it probably shouldn't. Then it's probably something we need to just stay away from. So so this is last week's high. So pretty much what I'll be looking for. I mean, we're pretty much already there, so I'm probably going to stay away from gold. But I mean, gold is pretty much, if you can catch a good New York continuation play, right, it's going to keep making highs, and which kind of gives us like a one-sided bias, which is really good to play into. So overall, I wouldn't be surprised if we sweep the high, maybe trade back into this over the next few weeks. But really, I'm not trying to short gold at all. It's on a run right now. You got to kind of let it do what it does. AUD, I'm going to look at AUD really quickly. I think AUD is going to be very similar to what's going on with euro and pound. If I jump down to the daily time frame, just to get a better picture. So we're sitting here, we consolidated, we wicked down. We wicked down into this overarching air zone once, twice, and we're just kind of consolidating. So ideally, what I would like to see is just a stronger conviction that the market's going to run higher. Here, we're seeing it on the 4-hour time frame. We are starting to see us make higher highs, right? Run towards these levels. We traded into this 4-hour fair value gap. So ideally, if we're going to stay long, I want to see something like this, right? And I'll be looking at a few levels. The first level is this high here, which is about 20 pips out. It's not really a lot there. Then I'll be looking at this overarching high, which is a little bit further out. It's about 60 pips out as a target. Maybe in between this fair value gap. So this would be my targets that I'm looking for us to hit and see how we react. Do we run through these? Do we wick off of these? You know, kind of give us our setup in reverse and then keep going lower. Ideally, I would like to think that if dollar's going to keep making lows, then you know these assets are going to keep making or start to making highs and turn around. So that's kind of what I'm looking at. Again, I want to stay away from. I know it sounds crazy, but I'm not really trying to day trade gold. It just kind of feels like it's being pumped. But if you do catch a good New York session continuation play, like I'm okay with that. Like, I mean, you know, do what you got to do. There's actually a good one today, and I watched it play out, and I just didn't have my accounts ready, so I was like, I'm not gonna do this. But there was a great New York session continuation this morning where we reversed. We formed the low of the day at about 2:15. Obviously, it's London session. We formed this cool 15-minute fair value gap, spent the rest of the session trading away from this low here. So we had pretty much like a bullish London, and then spent the rest of New York, dipped into that gap one time, boom, dipped into it twice right here, right? So that could have been a very good New York session play right there. But I decided not to take it. I was watching it, and again, I didn't have my accounts ready. I thought about like getting a new account just to demo it, but I was like, I'm good on that. So this is ideally what I was looking for. And the New Zealand dollar, I think, is going to be the same thing pretty much. I'm gonna look at these really quickly. So right now, I'm really focusing on the currency assets. I mean, honestly, again, you know, with Nasdaq, it's like you're trading at all-time highs. You got to kind of let it run and do what it does. But I just don't feel comfortable trading Nasdaq, trading at all-time highs. I probably feel a little bit more comfortable trading gold as it approaches an all-time highs because it's just projected to keep running and ripping. And like, there's probably not anything geopolitically that's going to cause that to change anytime soon. So I'm hearing people say we could hit 10,000 on gold, or sorry, 10,005 or 10,000, you know, in the next year or two on gold. So like, I mean, that definitely could happen, but I also kind of take things with a grain of salt because, again, you know, the reports. Ever since I learned that like people in hedge funds and people in big banks will call the news stations at like CNN, Fox News, etc., to tell them like this is what we think is going to happen in order to bet against it. I realized that you can't always listen to what people say on the news. So ideally, yeah, I would like to see us really break structure and keep going higher. Again, we're kind of just in this wait and see. We need to kind of see a couple things happen before we're ready to take a position. So I know that's not great to hear on for a lot of these, but it's going to be patience. But I'm bullish on any XXX USD currency and bearish on dollar. So ideally, this is, I mean, if I'm going to be bullish in this, I want to see this break structure and take out this high. Like, so this is something I'm probably not even going to trade. But ideally, we need to kind of see this break structure. Otherwise, this is very bearish. So this is kind of not looking great. So if I had to rank these setups, I'd be looking at Euro and GBP first. Maybe if you can catch something on gold to go higher, right, with that bias, and then take things higher. So that's all I really got for you guys. Hugo, I don't think you're the only one on here live. So if you have any questions at all, let me know. Just drop them in the chat. But yeah, again, dollar, it's nothing's really different from what we've said. Again, I'm not trying to go crazy because we are still in this weird situation with the government shutdown and all this geopolitical stuff going on right now. So don't try and go crazy on any trades right now. But if you find a clean setup, don't be scared to take it either, right? So just make sure you're managing the risk. So that's all I got for you guys. I'll see you in the chat this week. And yeah, peace.